Hello and welcome everyone. Thanks for joining this webinar hosted by Evoke. My name is Rob Bowl. I'm just going to wait a couple of minutes for a few more people to join. While you're waiting, can I just ask you just to make sure you keep your microphones on mute so we can't hear. Just waiting for a few more people to join. We've got quite a few people on here today, so just want to make sure people keep themselves on mute. We do have a chat feature, so if there is any questions that come up, feel free to use that. And we'll just literally kick off in 30 seconds. So once again, thanks again for joining. A few more people joining, but we're gonna kick off. So first of all, my name is Rob Bowl. I'm the founder of Evoke Management, and I'd like to thank everyone for turning up today. I hope you find this a useful half an hour of your time. Just as a quick intro, so Evoke Management, we're a team of experienced finance and commercial directors. We've been working with a number of SME companies, particularly at the moment, helping them with their funding requirements. So we've got an experienced team of people. You're going to hear from a couple of them today, as well as me. I just want to set a little bit of the scene because you're all joining this as you've got some concern or you're looking to do some kind of funding application and utilise the government's support. A couple of things that we're seeing, and I thought just help set the scene. Why is this currently challenging? Firstly, some of you might not have done this before. Secondly, we're in a situation where the government, as a massive organisation that doesn't necessarily understand SME companies, is trying to implement things for companies to go and utilise without necessarily understanding exactly what it means on the ground to actually access those applications. At the same time, we've got big banks that since the last credit crash have had to remove a lot of the people that would maybe make decisions around funding applications and are reliant on computer-based decisions. So they're finding it very tough to get through the volume of people that are asking them for help. And that's why some of you might be slightly frustrated in not getting the result you want or the speed at which you're getting a result. But that's a lot of what we're seeing at the moment. It's a big challenge to connect government, big corporations and SMEs. And that's one of the things that we've been helping companies with. Just want to say, this application process and accessing any funds is a team effort. The founder, the CEO of the SME company that you might be, and your finance team are part of the team that needs to be involved with this. I know we've got a few finance people on this call, so finance directors, financial managers, financial controllers. It's pretty normal that some of you would never have had to done this before. Not everyone in finance has had experience of raising money and going through this disaster scenario planning that people are having to go through. So for us, the team that we've got, this is something that we've done a lot of and experienced. So you're in a safe place to come and learn and pick up on our advice. So as I said, disaster scenario planning, plus what's really important is how you trade through this. So how you actually go over the next 3 months, 6 months, years to trade through this. I'd also like to make a comment that what the banks are looking for here is companies that can convince them that they are suitable and viable to trade through this and repay the money that they're taking on. So I think it's super important for anyone running their business and their team to make sure they're in the right mindset to go through this process and approach the bank when it comes to having conversations. Questions you need to be asking yourself: how much do you need to borrow? How much do you need to take into the business? And what type is the most appropriate funding? And remember, this is debt. It does need to be repaid. There's no point in just taking on the debt without a plan as to how and when you're going to repay it. Also, we've been working with a few companies, and I thought I'd just highlight this example. We've had two companies very similar, both looking for 250k through civil. So I've just picked it as an example. 250k is what they're after. One got approved, one didn't get approved. And we've been helping both of those companies. One has got a very different approach now than the other. So the one that suddenly got 250k coming in to help them, they're seeing that as a safety net. They're going to use it to pay staff for longer. They're not necessarily being as tough on some of the decisions they have to make because they know they've got that 250k. The other company has had to completely reapproach how they're going to run the business, how they're going to cut costs, and how they're going to make this work. And all I'd say to you from my experience is just because the money is there and you've got it, as I said, it's debt, it's money you're going to have to repay. You will make different decisions on the fact that you've got that money there versus not. And I've seen this happen a lot, that people are just using the money to go, right, I've got it, we'll use that now as a bit of a safety net. What I would suggest is just start thinking, if you didn't have that money or you didn't have as much as you really want, what would be your different approach to this whole scenario? So just something to think about. What I'm going to do now is pass on to one of my team, Stephen Reed. So Stephen Reed is an experienced finance and commercial director from my team. He's going to talk you through some of his tips and advice on making a successful application. So Stephen, over to you. Well, Stephen, just need to unmute.
Thanks, Rob. Some of the information I'm going to take you through today, you will know. I'll make no apologies for repeating it, but I'm going to also take you through some of the things you have to do in preparation. Robert, who follows me, will say similar things, but he's also going to put some flesh on the bones and give you some examples of how you should prepare this information. As of 3 days ago, some 2.8 billion had been released in loans. 36,000 companies have applied so far. And about 45% have been approved. But there is some great concern at the moment about the complexity and the length of the scheme. This is being done very much the old-fashioned way, rather than the way that a lot of fintech companies would now approach it. And it is making life difficult. Rob, could you put up the first slide for me, please? In terms of eligibility, these are the things that you may already know. Obviously, you have to be an SME with less than 45 million turnover, and 50% of that turnover at least must come from your trading in the UK. You have to have been in business for 3 years and have 2 years filed accounts. And the loan must be for a suitable business purpose that you can demonstrate. You have to be a viable business. You have to qualify for the loan. One of the things that is not realised quite often is that although 80% of the loan is guaranteed by the government, unless the banks meet their requirements, they cannot claim that 80% from the government. They have to do their due diligence. So they will go through this application to make sure you qualify. They have opened the breadth, if you like, of the companies that can now apply. Some companies who have cash flow difficulties, who were previously turned down, can go back again, and we can tell you more about that. Most importantly, you have to be able to demonstrate your ability to service the loan, and you will need at the same time to self-certify that the loan is being caused by your business downturn affected by COVID-19. Next, please, Rob. Now, not all lenders will require the same amount of information, but you should be prepared with this information. Once we know the lender that you want to go with as your first choice, then we can advise you further on what that lender is likely to want specifically. But in the main, you will need obviously up-to-date management accounts. You will need your last 6 months bank statements, and you should have, as I mentioned on the previous slide, 2 years of filed accounts. Now, I know some of you have filed accounts at Companies House, but they're in the abbreviated form. So they show a balance sheet, but not a P&L. You will need a P&L. You will also need a cash flow forecast. This is particularly important to demonstrate that the loan is affordable to you. I'll talk more about this in a couple of moments on the next slide, but that is a really critical part. And you need a business plan. Now, you should have a business plan that takes you through this current crisis, because you'll be suffering things now that you haven't previously suffered, with a lot of effect or detrimental effects on the business. And you will come out of this, so you will need a longer term plan, depending on the length of the loan, that you can show to the bank. You'll need to have details of your assets, and you will need also to show that you've assessed the risks and how you propose to mitigate these risks. Again, I'll touch on that on the next slide, because this is a really important part when you do your cash flow forecast. You should have details of any other non-financial actions that you're taking. For instance, repurposing some of your products, or looking at new markets that are likely to be stronger when we come out of this particular crisis. You also need to have details of cost-cutting measures. Obviously, furloughing staff is one of them, but also director and senior management pay cuts, shorter week working, any actions you've taken to minimise your outflows. And finally, if you've already had a loan in the past, then evidence of that is a useful factor. Next one, please, Rob. Now, this is what you need to do to prepare, and this is the real nub of this talk from me, if you like, because these are the things we must do behind the scenes to make sure that you can succeed. Firstly, you need to calculate the amount you want to borrow, and it's got to be the right amount in terms of seeing you through this crisis, but not being too much and certainly not being too little. And obviously decide how long you want it for. You can get a loan up to 6 years, term loan or asset finance, and 3 years on invoicing finance or overdrafts. So those are the typical loan terms. You need to show how you've calculated the amount that you want. You've got to have your assumptions that you can demonstrate you've been through this thoroughly. And the cash flow forecast, which I mentioned previously, you should have best and worst case scenarios and what you think the most likely scenario is going to be, because you have to demonstrate that you can repay this loan. And remember, you have to pay back both capital and interest. Now, in doing this cash flow plan, you need to assess the risks and also to plan for the different scenarios. Again, best case and worst case, and it's probably likely to be somewhere in the middle. But you should plan for an extended period of slow trade. We don't know how long this will last, but it's certainly going to be another 2 or 3 months before we start seeing an uptick in most of the businesses. And then most businesses will have a more gradual recovery. There's lots of talk about an immediate bounce back, but that's not certain in every business. So you have to plan for what's right for you. It's quite likely that we'll have different payment terms when we go back. Everybody will be in the same boat, and getting paid will be difficult. So allow for delayed debtor payment terms and possibly bad debts even. Remember that we will be in a very competitive market when we come out. Some of the markets that we traditionally sold to will be depressed, and there will be pressure on our margins because it will be a buyer's market. And remember, you need money to scale up your business. That's always the tricky bit. You're going from a low point to a high point, and you will need cash to fund your business. So put that into your plan. Next one, please, Rob. In terms of fees and guarantees, there are no upfront costs, and there is no interest in the first 12 months. You'll be pleased to know there are no early repayment costs. So you can, if you can justify it to the bank, you can actually take a loan for perhaps more than you need on the basis that you can repay it without any penalty. The lenders do not require any personal guarantees if you're borrowing below 250. If it's above that amount, you will be asked for security, but not your permanent residence. Now, there are all sorts of examples of that security being asked for, and that should be resisted because that is not within the government guidelines. Last one, please, Rob. The last one? No, thank you. No, 2 more, sorry. How to apply. This list of lenders is now growing. It is significantly above 40, and I was listening on the Today programme where another bank has come on in the last couple of days. But first of all, you should approach your current lender because that's the easiest route, and then go to other lenders if you're unsuccessful with this one. And you should, as Rob said earlier, be aware that lending, or borrowing rather, is not your only solution. It may not be the best one. You need to look at your business and other options which we can help you with. Last slide, please, Rob. And finally, remember, and this is crucially important, these loans have to be repaid. This is not free money. The bank will, or the lenders will, impose covenants, and that means that if you are over optimistic, you will get found out very quickly. The information you put through has to be sufficiently thorough to make sure you have the best possible chance of succeeding at the first attempt. You don't want to be doing this more than once. We've got enough to do in our day-to-day in terms of getting through this, so we have to get this right. A lot of the decisions that the lenders make will be made on algorithms, but as I said earlier, different lenders require different levels of information, so you can't take that for granted. You have to be prepared. And even if the lenders do not require everything that I have put up on this screen, you do. Lack of planning is the top reason, the primary reason that businesses fail. So for your own peace of mind and for your own business sense, you need a cash flow forecast that is robust. You need a business plan you can rely on, and you need to make sure you've looked at the key risks. Thank you.
Great, thanks, Stephen. I'm going to pass over to Robert Green shortly, who from the Evoke team is an experienced finance director. I just want to mention we're getting a few questions on the chat, and I've got a few direct questions as well. We're not going to be able to cover everything in this session, and we will stay on for a bit afterwards that anyone that does want to talk. But what I'm going to share with you is a form, which is a Google form, which is a funding requirements checklist. If anyone wants more help with anything we're going to talk about, you can have a look at that form, fill in your details, and we are offering a 30-minute conversation with you to go through any of the questions you've got. So I've shared it on the group chat. If you want to have a look at that and fill it in, I'll remind you again at the end. But that's what we're able to help you with. Rob Green, are you ready?
I am.
Great.
Okay, first slide, please. So I'm Robert Green, and I'm going to share with you some of the practical tips that I've learned over 25 years of making a number of distressed applications for funding, reliant on the promise of future cash flows as a result of the recessions that I've had previously, but obviously none as deep as this. So let's really concentrate on what you need to prove to be eligible for the CBILS funding. The key words are viable business, right? Means you have a history of profits. Right? You've got to demonstrate that you were on an upward trend before COVID hit, and that your downward trend is purely the result of the effects of COVID. And most of all, you've got to demonstrate that you can afford to make the repayments, so that when your business returns to normal, whenever that may be, you'll be able to generate enough cash to fund those repayments. Next. So have a think about what data you've got and what is the most useful to support your claim. Your published accounts, as Stephen mentioned. Now you may need to qualify the result that you've shown, because all good finance directors understate the profit as much as possible in order to mitigate the tax bill. You will need, if you've put in provisions, various contingencies to suppress the taxable profit, then tell your bank manager what, and give them an indication of what the real trading profit behind the published numbers are. Look at your current management information. The management accounts, obviously, it's that variance against your original budget that's important, and any KPIs that you use to measure the success of your business. The budgets and the cash flows are a given, but they must be for the duration of the loan that you're applying for, and that can be up to 6 years. So this is far more than just your normal annual budget process. The behavior over time graphs, as you'll see from the next few slides, these really are the key to demonstrate, rather than great schedules of numbers, what direction your business was traveling in, the effects of what you've put in your forecasts, and the recoverability, the bounce back ability, to coin a football phrase. And I'll show you those in detail. Look at what information you've got on your key customers and your suppliers, whether you've contacted them, you know what their financial positions are, and any agreements that you've made, both in terms of payment holidays for suppliers, revised terms for your key customers. The tip here is to make the information you present easily digestible. I've used the phrase idiot proof, and remember we're talking about bank managers. It's quality you need, not quantity. Next. So consider how you've been affected by COVID. You'll know your own direct effects within your business, but look at the indirect effects. You know, what are the circumstances of your customers, particularly your key customers, and how quickly are they going to be able to resume reordering at the same level they were, or indeed, are they going to be there in 6 months' time? Look at the supply chain issues. It's fine if you're getting orders, but what about your key suppliers? Are you going to be able to deliver these orders? And whilst with you will have factored in furlough in your staff, but think about the staff absenteeism. The sheer, I mean, we get physical illness, we'll then have mental illness, and the adjustability of working from home. Next. Right. How to present your information. On this slide, you can see it's the normal last year, this year, next year, but it's going out for a full 5 years. Right? Show those trends in block graphs, focus in on the sales, the dip, and then the subsequent recovery, your margin, which you may need to adjust to encourage people to buy from you in greater quantities or place their orders quicker. What are you doing with your overheads? You're going to have a really good lean management focus on them, okay? And as Stephen said, you're going to have a best scenario, you're going to have a worst scenario, and you're going to, I would suggest, present the most expected scenario, but be aware of the impact and record it. The impact is if you miss those sales targets by 1%, by 5%, by 10%, the effect of having a reduced margin. You know, really consider and say, if we drop by 5% on sales, the effect will be this to the forecast that I presented. Next, please. Right. For those of you with key customers, in particular, focus on your sales forecast by customer, where those customers have give you some reassurance that they're in a good financial position to resume normal trading as quickly as possible. But use graphs to demonstrate the trend. There will be, this is just a demo, there will be a dip in sales because of the effect of COVID and the anticipated duration of it. But you've got to get that hockey stick coming back up. Next. Right. The margin, think about your margin, show that graphically. So that's a large one because it often gets lost in just a table of figures. Next. Right. The overheads. You're going to take action on your overheads. There will be efficiencies that you will be looking harder and striving harder to achieve. Again, a graphical representation of that paints 1,000 words. Next. Right. And following it all up in total summary, how your profit will be affected and then hopefully recover and go on in the years to come throughout the duration of the loan to throw off more than sufficient cash to make your repayments. Thanks. Next. Right. So thinking about the overheads in particular, and your reliance on key customers in particular, think about the things you should be taking, the actions you should be taking to mitigate that impact of COVID. You know, researching other routes to market. We've talked about the staff costs and furloughs, negotiating any further payment holidays and installments, and being able to scale down variable costs. User licenses is one that's often remitted. If you furloughed your staff, then furlough your user licenses. And what the banks will expect as an absolute necessity, that you've fully explored every other form of government assistance that's on the table. You know, rates, rebates, all those things, payment holidays for your VAT, for your PAYE, they're going to make your cash flow look better in the short term, but remember they will ultimately have to be paid. So make sure they feature in your cash flow. Next. Right. How optimistic should you be? We've talked about worst, best, and expected. You should look to firstly recover to the previous sales levels, and then, providing you have that upward trend, I would suggest continue the upward trend that you had historically, albeit 6 months, 9 months, a year, however long you anticipate COVID will impact your business. And don't underestimate the lag after the lockdowns are removed. People's spending habits, if you're a B2B, then it's your key customers, but if you're a B2C business, the attitudes and perhaps the affordability of Joe Public is going to be significantly impacted and will take some time to recover. As I said before, and you may need to sacrifice the margin, so make it measured, make it deliberate. And we talked about payment terms. Focus on the costs that you can control, and I will say time and time again, always have a sensitivity analysis, because what you plan to achieve, you may not achieve fully. Next. Right, my last slide. There is no such thing as free money. I've been speaking to some CEOs that got the wrong impression from just looking at the 10 o'clock news that this was the government throwing money at businesses. It's not. It's still the bank's money, and they will apply the same rules. Their only protection is that if you fail, the government will pick up 80% of that debt. So be aware of the interest rates that are being offered, shop around. Stephen's alluded to the fact there are now over 40 approved lenders. So get quotes for the rates. HSBC put theirs large at the front of their application form, but others we know will tell you afterwards. But there will definitely be covenants imposed. Those of you that haven't raised money like this will not really grasp the impact. Once you've set your budget and you've agreed it, the various debt and liquidity ratios, the repayment multiples based on your EBITDA will be set in concrete. And if you breach those, life will get very difficult. It's no longer, you're no longer able to say, oh, sorry, my year's budget was wrong. No, that won't wash. So make sure you're really confident and realistic about your projections, because this may also impact the ability for you to borrow more in the future. I'd like to leave you with just one last thought. This whole forecasting process, it's not like an annual budget. The forecasting process doesn't finish with a successful civils loan. But in many respects, you've only just begun, because you're going to have to revisit this forecast into year 2, into year 3, into year 4. So we're there to help if all this is a bit new to you and scary. Thank you for listening.
Great, thanks, Rob. That was really useful, and hopefully everyone got some good value tips out of that. And you know, as Rob said, this isn't necessarily straightforward or easy for someone who, even if you've been working in finance, you might not have had to do this before. So we are here to help. What I've mentioned earlier, I've just put on the chat again. We have a form that you're welcome to fill in, which will come straight through to us. And on the back of that, we will set up a 30-minute free conversation with one of the team, so an experienced finance or commercial director. I'm going to try and join a number of those as well, as is my my colleague, my commercial director, David Seaton. So we will try and help as much people as we can. I know there's a few questions that I'm just going to address briefly. I also want to share with you how we're actually also helping through this, if anyone wants to know. So the way we've been working with companies so far, and we've got a number of applications we're working through, we have 3 levels of service that we can help with. Number 1, we can just have a look at what you've done, which is a kind of check and submit. So before you hit the send to your bank, we can have a review of what you've done and feedback. A level 2 support, we can take ownership of it for you. So we can actually have an experienced finance director pick up what you have and take it forward. So we'll produce your plans, will produce your forecasting and your P&L. So we'll do that, and we'll also work with the bank and you to get it over the line. So we've been leveraging a lot of our relationships with banks to get this done, and we're happy to try and do that as part of this. And then, as Rob alluded to, the most important thing here is once you've got the money, is you've actually been able to prove and successfully trade through this uncertainty. So we are then offering ongoing support to help revisit those forecasts, revisit those plans, and help you be on the best position to succeed, not only getting the money you need, but successfully trading through this. So that's all we're going to say. There's a few questions that I just want to address, and we're going to stay on a bit longer than just half past. If anyone does need to go, please feel free to drop off. We will share the slides, and we will share the recording as well over this. If there is anything specific, and I am seeing a few specific questions come up, best thing to do is to fill in that form, and then we can pick it up directly with you. And depending on the inquiry, depending on the sector, we will make sure we've got the best person aligned with your sector or specific requirements that we can. So there's a number of us ready to make calls and help. So just a couple of questions. I know someone's raised the question about companies that are pre-revenue R&D. There are other government schemes that are related to more grants, and they are desperately trying to encourage people to do more R&D at the moment, because that's going to be part of the way of trading through this as a country. So there are other options there if that's something you want to consider. There is certain things that are competition based and other things that you just have to apply for, but that's something we can also help with. I'm going to ask David to help with any relevant questions as well, but just one thing that's come up just around different banks. So I might ask Rob just to comment on this, Rob Green to comment on this. I heard a stat end of last week, and I don't know if it's moved much, but last week I heard 90% of the approved applications so far are through NatWest. So if you are looking to do your funding through NatWest, you're in a pretty good place. I know the other banks are trying to catch up, but NatWest has by far been doing the most of this. I've also, you might have seen Funding Circle. Anyone registered on Companies House would have probably had letters through the post to them from Funding Circle. They have now joined the scheme of lenders, and they see themselves as being in a good position to process more applications. So as Stephen mentioned, there are other lenders coming up. Some are being quicker than others to react. And I know NatWest has done more. Rob, I know you've been speaking to NatWest, Barclays and HSBC. Any comments to add?
Yes, indeed. Certainly a week ago, still a week ago, there was a marked contrast. NatWest strategically had decided to process all the applications, have them done by their local relationship managers. They took them off everything else. You'll find it hard to open a new account with NatWest. So these were the people that were in touch and understood the business behind the applications. Contrast that, probably the most extreme one, and it's changing, so I'm being assured, was Barclays. That every application that came in throughout the country went to one of two centres set up straight into credit management. And you can imagine them punching selected numbers into the computer, running the algorithms, and the computer says no. Hence, the most important thing you can take away from my presentation is make the information as accessible as possible. Now it's come down to relationship managers, particularly in HSBC. They are absolutely swamped because of their market share, and they haven't got time to read through tons of narrative and really get behind the numbers, so that they can process the application in the best possible light. So anything you can do to really home in on the trends in your business and aid a relationship manager to process that claim as quickly as possible is going to get you more success, because at the first hurdle he's just going to reject it.
Just one other question there, because I know just a question about relationships. I know a good example that I've just been recently talking through with Robert Green and a client, and we've really been able to leverage just knowing people higher up the food chain in the banks who can make decisions. So some of the more traditional bankers that are running teams of relationship managers, knowing there's an experienced finance director working with the business and having gone through the plans and being able to communicate the sector specific details has been really useful for the banks just to get things through. So just one comment on that someone's directly messaged. I'm just trying to pick up if there are any other questions that are worth sharing. I think the few that I've got directly are pretty bespoke, so I would just suggest filling in the form that I've shared. We'll pick that up, and we have got people that can come back to you potentially later this afternoon, if not Monday. So if you can get the form filled in, we can have a 30-minute conversation with somebody later today or Monday, if that would be useful. Based on time, I'm going to look to close this down. If there's any additional questions that come through, we can address them in the last couple of minutes. But I'd just like to thank everyone. Thanks, Stephen. Thanks, Robert, for speaking, and thanks everyone for joining. I hope you found this useful, and look forward to working with you shortly to help you through this. So good luck, stay safe, and hopefully speak to you again soon.
Good luck, everyone.